Hello, and I want to thank everyone for joining us here today. My name is Amy Rotman. I'm the editor and content director for the Assay and One-to-One Group, and I'm very pleased to welcome the Lahontan Gold Group here with us today. So, joining us here, we have Kimberly N, founder, executive chair, CEO, and president, and we also have Brian Maher, founder and vice president of exploration. Both are joining us here today. And so they're going to be bringing us through some updates on Lahontan Gold, and then we'll open up the floor to any questions. So if you have any questions for Kimberly and Brian, please feel free to submit those in the Q&A box, and we will address them after the presentation. So over to you, Kimberly and Brian.
Thanks, Amy. We're excited to be here with everyone. Brian, would you like to share our presentation?
Sure.
We've been pretty busy at Lahontan the past year, and we're gearing up for moving forward through this year with some exciting updates. We've been working really hard on our permitting for our Santa Fe, advancing that forward, moving the block out of Victoria Gold's hands into our largest shareholders. And we're talking about getting the rig back out. We put out a PEA last year, which looks really great. That being said, we're ready to continue to improve the numbers and move it forward. I'll turn the page. Just a snapshot of where we are today. You can see we have some good shareholders: Extract, Merck, Goodman, Palos, APAC. K Gold is Brian and I. We own about 9% of the company. We have 242.2 million shares outstanding. Our market cap is about 10 million. So yes, we are a good buy right now. A lot of people ask why our market cap is so small. Well, this last year, we had Victoria Gold had a position of 25% of our company, and we suffered along with their mine collapsing and the uncertainty with that. That being said, we finally moved that block into Merck, Extract, and some other of our shareholders. So we're really happy to get that overhang, if you want to call it, but I call it a hangover, off of our books, and so we can start to really shine and show people what we have. We also have Jay Taylor and Brian Lundeen as newsletter writers. We will be at Metals Investment Forum this next Saturday. So if you guys are around, come stop by and see us. I'll be presenting on Saturday, so that will be a really fun event. And of course, PDAC booth 2848. So management board, Brian and I, of course, run the company. We have a really tight management team, of course, on the ground. Brian and I do a lot of in the field work. Our board sits as Chris Donaldson, Josh Surface, and Bob McKnight. And John McNeese is our CFO. We have a pretty small board right now. We did have John McConnell step off when the whole Victoria situation happened. We're looking to beef up our board as we move towards production, because we are deep in the weeds with our permitting for our Santa Fe pit. And, we'll be moving forward on that within the next year. That being said, you don't want to rush through just finding board members. We're really looking for engineers and mine builders. And, Brian and I have extensive background on the corporate financing side of things. That being said, we would like a well-rounded board for the future. So we will be beefing that up. That will be something for people to look for. And just to talk about our projects. So our flagship asset, Santa Fe, is a past producer. It has 4 pits on the property, past producing open pit heap leach. So low cost operation. It was mined from 1988 to 1994. Significant, gold and silver came out of the project back in the day. What we've been doing since we acquired this property is basically drill it out and focus on moving it forward to through the permitting phase, because it's a mine under closure. We have a lot of infrastructure in place. We have a substation, 3 wells, all the water rights we need, road access, etc. So all of that helps us permit this. And we did put out a PEA with some great numbers, as I said earlier, that we'll be talking about. But really, what our plan right now is to fast track this through so that we can be breaking ground the next year and a half. Our satellite operation West Santa Fe, we acquired a year and a half ago now, actually. It's a lookalike to our flagship. It's only 15 kilometers away. We love this asset. We really look at this as a low cost operation to add more ounces to Santa Fe proper. So once you're mining Santa Fe, West Santa Fe could come online later and you'd be sharing admin sites, etc. So very low cost operation. And we're going to be looking at getting some drill holes in this year. We just announced our program yesterday of submitting a small drill program to kick off the West Santa Fe project for people to get to know. And then Moho is a high grade gold and silver vein system in the Walker Lane that had never been drilled out before. Brian and I picked it up on our private company in 2018. We'd like to get back out there and drill as the grades are significant, 25 grams gold, up to 300 silver. It's a vein system, parallel vein system. So we'd like to see how big that will get moving forward. So where are we? We're in the Walker Lane. As we all know, Nevada is one of the #1 jurisdictions in the world, tied with Utah. We're really happy right now, especially with the new administration, to be in the United States. We do believe that this moving forward with permitting, we're hearing it's going to be mainstream, throughout the U.S., especially in Nevada. So we're already seeing some shifts there. We have size and scale. We've drilled out 1.95 million ounces to date. It's continued to grow. We did stop drilling for a while so we could focus on getting this permitting going, because we know we can permit and just continue to add more ounces through the drill bit later. But getting those permits going that take a long time was super important to us. We have year-round access. Brian and I were just out there last week. And it's dry and it's fantastic for as far as always being able to have the drill rig out there. So Brian, you want to talk about our resource and the breakdown of it?
Sure. So in November, we put out the results of our new resource estimate. Was really nice to see. We're up to, as Kim mentioned, 1.95 million total ounces in both indicated and inferred categories, of which about 900,000 ounces are in the oxide metallurgical domain. And that part is really important because, Ms. Kim did mention, this was a past producing heap leach operation. And our intention is to bring it back in production using that exact same heap leaching technology. Very low cost, very profitable. And we'll talk a little bit about the PEA shortly, but you will see those numbers. You can see the deposits are all outlined there: Santa Fe, Slab, Calvada Central and East, and York. And the very colorful little blobs there, those are the block model projected to the surface. This is by no means drilled out. We've been able to conduct all of this exploration here over the last 4 years under what the BLM terms a notice of intent, or by drilling on our patented claims or within the area that is covered by our mine closure plan. So we've actually been able to get quite a bit done, nearly 20,000 meters of drilling just by ourselves. And combined with a historic drill hole database, it gives us over 100,000 meters of drilling to define these resources. So it's really great to note that about 75% are in that indicated category. So we have a very high confidence that those ounces are there and where they're located. This is just a beautiful pit looking to the beautiful looking pit. The view is to the southeast. That's the Santa Fe deposit you see there. On the left-hand side of the photograph, you see those wonderful rust colors in the high wall of the pit. That's oxidized gold and silver mineralization. So our game plan here is actually quite straightforward. When mining ceased in 1994, gold was about $350 an ounce. Now it's nearly $3,000 an ounce. Obviously, even though costs have increased, that dramatic rise in gold price makes that material that's in that left-hand side in the high wall now quite economic, and that's what we'll be focusing on. You can see the pit is just standing there. It hasn't been maintained in over 35 years. So the 50-degree pit walls are quite stable. We'll be using that in our mine plan. And then I thought it was interesting, but I went through and looked at the average grade of currently operating open pit heap leach mines in Nevada, just to compare our oxide average grade to them. And you can see in that little chart on the left-hand side, we're 0.64 grams per ton. except for Gold Bar, that's the highest average grade of an operating open pit heap leach operation in Nevada. So we've got grade, we've got location. A lot of things really stack up quite favorably for Santa Fe.
I love this picture. About you, but
I do.
this tells you a lot about the project. You can see the Santa Fe pit in the background. You see the road access, the power line going to the substation that I'm staying next to in the picture there. It just shows you that they put in the substation back in the day specifically for this mine. So we have plenty of power, and you can see the slab Calvetta complex. The pit is just continuing to grow into one big super pit. So it's pretty easy to see why we are pushing forward through the permitting phase now, rather than drill to see how big it is. We have enough warranted to have a pretty good sized mine life right now, and it's just going to continue to grow.
One thing I'll throw in, Kimberly, one of the things I like about this photograph is it kind of gives you an idea of the lay of the land, and you can see there's just not
Nothing
a lot
there.
of vegetation out there. The Santa Fe mine is located in far western Nevada, near the Sierra Nevada mountain range. The Sierra Nevada blocks most weather coming into this part of Nevada. Hence, this is one of the driest parts of Nevada. Why is that important? Not only does it allow us to access the area all year round, but as we're going through these permitting cycles, and we are looking for things like, is there any endangered vegetation? Are there any endangered species running around? The bottom line is there's just not much water. Therefore, there's really not much to document there. And so that's a real positive aspect.
We are very fortunate from that aspect. Also, you can see that there's no people out here, but the town of Hawthorne, where we have our warehouse and our team, is only 30 kilometers away. So it's a brilliant drive from there, and a lot of workforce there.
Yeah. So this is kind of a nice summary slide discussing the results of the PEA, and some really good bullet points here. The life of mine strip ratio for the project, that's mining all 5 of the pits you can see here, Slab, Calvetta, York, and Santa Fe, is only 1.6. So we're not moving a lot of excess rock. In the inset map, you can see the pits there are in the magenta color, and then adjacent to them are the waste rock disposal areas, commonly called mine dumps. And you can see the relative size in comparison. But why is that important? The less rock you have to move, the lower the cost. Low capex, we're reporting in the PEA 135 million US capex to build the mine, but that includes a 20% contingency. So the actual number is actually projected right around $100 million. So it's not a big ask in terms of putting together financing. You can see the payback period is 2.9 years. That does include the first year of pre-production. So it's actually after only 1.9 years of mining. And our cash costs, again, I went back to those same operating Nevada heap leach gold mines that I referenced in the previous slide and got their cash costs. And they vary from a low of about $1,200 at Phoenix, which is operated by Nevada Gold Mines. And then it rises up to an excess of $1,600 at Gold Bar. And then there we are, just a little over $1,200 cash costs. That makes us one of the lowest cost, potentially lowest cost heap leach mines in Nevada. And I think that's really, really important.
And as we add more ounces, those numbers will probably drop down, right?
Absolutely. Yeah. And this kind of highlights this operational history in the graph you see there. So year 1 is pre-production, and then years 2 through 9, we have all the production coming through. That averages about 50,000 ounces a year. So it's a pretty good sized mine. But as Kim was mentioning, with further exploration, we can extend mine life and further pull down those costs. And that's what those green bars represent. That's the upside of the project that we can gain through further exploration. 12,500 tons per day, 8-year project life. Again, that low cash cost. The NPV 5 there, that's after tax using the spot case scenario. So that's $2,700 gold, which,
it's now
a year ago, that might have sounded like a big number, but since we're closing in on $3,000, and importantly, we are pushing to try to have permits to build by the end of 2026. I think it's a fair guess that gold prices are probably going to be a lot closer to $2,700 than they're going to be to something lower like 2,000. So I think that's a really valid number to use. And you can see there, IRR 34% after tax. I mean, that's a great return on investment. and nearly $1 billion in gross revenue over the life of mine. So,
And this is just what we know now, right? This is our first PEA. We're going to continue to grow the ounces and add to that. And these numbers are going to get even better and a lot more sexy. We talk about this all the time, though. Okay, it's going to cost around $100 million to build this. And people say, well, how are you going to do that when your market cap is X? Well, when you have a project like this, you don't have debt on your books. We have a lot of flexibility with having a royalty on the property because we are pretty royalty light as a whole, as far as our whole package goes. So we do have optionality between royalty, debt, because the payback is pretty short. We have that flexibility, and a lot of funds will be happy to fund this because of how short the payback is and how low risk that is. So when we look at the future of where we will be when we go to put this package together, we can do a lot of different financings for it.
well,
You love this picture.
Yeah, of course.
I love it too.
I like to
You
draw.
were the geologist.
And then we talk about this upside, and that was, those green bars that you were seeing in the last graph. How do we achieve that? Well, drill, drill, drill. That's just as simple as that. We have plenty of places left to drill on this project. You can see this long section, that's through the slab pit. The heavy red line, that's the resource pit as designed at $1,950, which again seems like a ridiculously low number. But you can see those resource blocks that are below that pit shell. So that's material that we've identified, but we don't count in our resource. And a deeper pit driven by a higher gold price will capture those. But you can see it just marching off to the north or left-hand side of the diagram. It's wide open. And in fact, that photograph of that drill rig is one of those last holes, and you can see the pit in the distance in the background. That's how we grow this thing. We keep drilling, we keep adding ounces, and then we'll be looking for the potential to add perhaps up to 200,000 ounces of additional oxide resources. These are the ways that we grow this project. And further, the PEA does point out that with some additional met testing in the Slab Calvata area, we can improve the gold recoveries used in the PEA. Yep. And so these are all straightforward, simple ways we can continue to not only grow the project, but improve project economics.
Absolutely. And as you can see by that dashed line, all of those blocks will come into the next PEA because we're not going to be doing it 1950 gold. We'll be doing it a more realistic number, right?
Correct.
So that's going to be exciting to see how that adds to the whole model.
Yeah, they're just sitting there. So
yeah. So we talk about this all the time, permitting. It takes a long time to permit a mine, as you all are aware. We've been working on this for several years now. We've been working on the plan of operation, which is in the upper left-hand corner here. Everything you see in yellow is a part of that permit, 12.2 square kilometers. It basically is showing you that we will be able to drill over 700 plus drill holes in this area. So basically our whole land package will be able to do this. The area that's not included, we picked up that land after we started this process. It's nice flat land for later down the road expansion. That being said, we had to do 2 years of studies, looking for raptors and bugs and bunnies, as we like to call them. All those are done now, and we'll be going out to the comment period through the NEPA process. In parallel with that, the mine plan of operations is in play and is happening at the same time because we can use all the same studies for the mine permit because they're all very recent. You can see it in the left-hand bottom picture, the layout of the operations to be. So we are targeting being able to build this out in 2026. When in 2026 is a good question because we have a new administration and we all know it's been pretty crazy the past month or so watching everything that's happening. But what we've been hearing is it's all positive as far as fast tracking our project through. So fingers crossed on that. Things we can't control, right?
So I just might add in an update because we've been working quite hard the last month on both the exploration plan as well as the mine plan. The exploration plan of operations, which does cover the drilling, as Kimberly described, is in the hands of the BLM. It was submitted at the end of last year. They're in the process of analyzing each of the different areas that are assessed. The idea is to make sure that in the process of drilling on these holes, we don't impact cultural or biologic resources.
Correct.
I actually met with the gentleman who's reviewing our plan of operations in Carson City last week, and they expect to have that review done in the coming weeks. There may be some consternation due to the new administration, but I think that'll be fine. Meanwhile, for the mine plan of operations, it's really important to note that while you do have the BLM plan of operations, you also simultaneously a permit through the Nevada Department of Environmental Protection, where you're looking at waste rock characteristics, impact to air and water quality, et cetera. And those studies are ongoing. So as Kim points out, and it's really important, we're not just doing this in sequence, but in parallel in order to make the total time frame as quick as possible. And this is really interesting.
Yeah, I just want to put this in there so people could see what's really happening. I mean, we get these letters all the time, and the Congressman Mark and Stephen Hartsfield, they've reintroduced the Mining Regulatory Clarity Act of 2025, which reaffirms that public land use under mining claims inherently accompanying mining support activities. This is really important to us because they're basically saying that they're pushing really hard. They believe that mining is super important, especially with all these tariffs going on that we've all been seeing happen. If we're really slapping 25% on China, you think that they're going to be selling us mineral, so we are going to have a shortage. And, this isn't news to any of us sitting here today, but seeing that the congressmen are pushing forward to support mining, specifically in Nevada, is fantastic. We're seeing it all over the country, actually.
Well, and what's interesting particularly is that this is a bipartisan bill.
Yes.
The Senate version put in by Senator Cortez Masto. She's a Democrat.
Yeah.
Modi's a Republican in the House, but the whole delegation from Nevada supports this. So this is really
brilliant. Really fantastic for us. So let's talk about West Santa Fe. We love this asset. We got it for a very low cost, 1.8 million over 7 years. It's back and loaded. We haven't, our first payment was 25 grand the first year, 25 the next year, and so on. We're really focused later this year, mid to late this year, to get the drill rig out and start really defining what we have. You can see all those roads in there. This has been drilled out a fair amount, 171 drill holes, but all shallow holes because they were done in 1985 or something. So there's a lot there. We can see that it's a big system, and again, it's a lookalike, very similar grades, oxide, etc. And of course, it's open everywhere. It was a past producer for silver back in the day, so we're pretty excited to kind of dig into what that looks like. But the phase 1 drill program will be 6,500 meters, 26 drill holes to verify historic drilling and step out strike and down dip. So we've worked with our team that puts together our resource estimates to just kind of go through what we have so we can start bolting on our own drill holes to really define what this looks like and use the historic data along with our new data and play, see how that looks. And of course, you can see all those beautiful colors in that picture to the left. It's all this beautiful oxide. Everywhere you look, it's gorgeous. I mean, do you want to say something about this?
Well, I think I'm going to emphasize the proximity to Santa Fe itself. I mean, obviously, we're heading towards a production decision within the next 12 to 18 months at Santa Fe. We anticipate that will be a positive decision. But then the first thing you start thinking about is, okay, well, what's next?
Find more ounces?
Where are we going to go next? And we believe there's good potential to find a mineable gold and silver oxide system here at West Santa Fe. But given its proximity to Santa Fe itself, it can share a lot of infrastructure. It could be a very low capex operation. And to be able to mine both of them right next door to each other at the same time would greatly improve the production profile for the company and really set us on the stage to be a mid-tier producer.
Yeah, and we have a 19 square kilometer land package here, so it's sizable. I mean, this could be a company in itself, just this project. So we're really excited to have this in our hands to explore. And this is really a cool slide. We've been doing rock chip samples all over the property. You can see really good numbers: 2.61 gold, and 900 silver. I mean, these are really crazy numbers. And everywhere you look on the property, all these little shafts from back in the day. So this is something that, really fascinates us, and it's giving us indications of where we should be drilling.
Well, the other thing you can see in the background of this, all these roads.
Yeah.
I mean,
Surface disturbance that we haven't done, and it's great for us, right?
Right. We can take advantage of existing surface disturbance. We can do all of this drilling under a notice of intent, which means rapid permitting. And in fact, we could add a lot to it should we have some success in that phase one.
Yeah.
So, and then this is, I just like, because this kind of gives you an idea of the size and scale. So this is taking all the historic drill holes here, as Kim mentioned, 171 drill holes, and then building this leapfrog model. And so those oblong shapes you see there, that's the outline of known mineralization, just basically an envelope that goes around where we see known mineralization at a 0.31 gram cutoff. And you can see there's lots and lots of material there. These bright red colors are plus gram intervals that go right to the surface. So when we say we're going to drill 26 holes, we want to be able to use this drill hole data in a future resource estimate. So we will have to do some confirmatory drilling in and around this area, but then we get to start stepping out both down dip and long strike and just see how big West Santa Fe can
And we've
be.
already done that back end work, so we know where we can drill to add these ounces, the historic ounces. We're not wasting drill holes, etc. So pretty excited about this. You'll be seeing news flow on this in the near future, right? And just to talk about some catalysts, people, ask how are you going to move, your share price up and create value for everyone and the company. And we're going to do that, of course, through the drill rig out at Slab Calvada, and then we'll head over to West Santa Fe. So we'll have that once we have the drill rig out. We'll be working on both projects. But we'll be talking more about the updates on our permitting, as we should be having some good information on that in the near future. Oh, and with all that drilling, we will be going and rebuilding another PEA, because we think our first one was a good kick at the can, but we know where it can be better. We're working with Kappas Cassidy and Respect on where we can improve the models and just add more ounces, because we want this to be a really big operations, and we need to know that information now as we're going through the permitting. I will say our PEA is a very good quality PEA, and there's a lot of engineering that went into this, more like a PFS style, because we need a lot of information for our mine permit. We can't just go off a promotional document. We have to go off specifics, like how much dust we're kicking up and etc. I mean, it goes on and on and on, right?
That's a really good point. And for those of you who'd like to dig in, I would encourage you to go to our website or CDR Plus and download the PEA. It's nearly 300 pages.
Yeah.
You want to see a list of the 69 potential employees that we're going to hire. I mean, it gets into that level of detail.
Gets into the weeds.
But the water consumption. I mean, you might think, well, why are you worried about water consumption now? You're just at the PEA stage. If you're going to keep that permitting moving forward, you've got to be able to tell the state of Nevada how much water you're going to consume and where it's going to come from. And I think that's super important.
It's super important. And also, I mean, we all know these documents cost a bloody fortune and take time, but because we have all that information already done, once we add more ounces and rework the model, it's gonna be quick when we want to do the PA. We can get it done in a short timeline, and they won't have to go back and figure all that stuff out because they'll already have it. There'll be some adjustments, but not a lot. So we're pretty excited about that. And look, we're going to be on the road talking to our shareholders. We do have a strong base. We only have about 40% float of our shares right now. And those, of course, our retail market is super important to us, because at the end of the day, we want to move our share price in the right direction. And again, it's all about the retail market to do that. And we're just going to keep building this business up as we move through this process of permitting and drilling and everything else.
Well, and it all ties in together. Like, for example, if we drill out some more resources, that influences with the conceptual pit shell is going to look like, which then influences the mine
Everything.
plan. You do some successful column leach testing and slab and move the recovery up into the 60+% range. Guess what? That changes pit economics. That changes the mine plan, but it also changes the number of ounces you produce. So each is a
All
building
that
block.
fine tuning is important.
Yeah.
Yeah.
For a PEA update.
Yeah. And, we talk about this all the time. People say, okay, well, you're going to do a PFS next or bankable study next, et cetera, et cetera. And right now, because we have so much information from it being a mine before a mine under closure, we have so much data that, we've gone out there and talked to debt funds. I used to work for a debt fund. I know what they're looking for to finance this project. And a lot of them say that, they don't need a PFS, they don't need a bankable study to make a decision on this project because of that data. That being said, we will go to a PFS level, but that will be next year. This year, we want to update our PEA to get to really fine tune recoveries and building more ounces in the mine life, et cetera. So once we go to a PFS, it's where we really want it to be.
Exactly.
So that will be really fun to do. And that's our presentation.
All right. Well, thank you for running us through that. It was all quite interesting. And we do have quite a few questions that have been coming through, and I want to encourage everyone to continue to submit them. We have another 25 minutes or so, so let's just run through it. So let's start with, how fast can the projects be advanced to take advantage of the uptick in the gold price?
That's a great question. I think we're in a really good place, not only because of the new administration, but gold is moving quite quickly with this new administration. So we like the idea that we are so far into our permitting that we believe in the next year and a half at the most that we'll be breaking ground. So we actually are at a really good timeline for what's happening with the gold price. I just got an email from Jay Taylor the other day. I don't know if you saw that, but he's thinking that gold's gonna be 8,000 an ounce. I was like, what is going on? But that being said, at $3,000, we'll be printing money. So I think we're in a good spot with timing of how fast that we've been pushing on our permits to get there.
I think that permit part is really the important thing. Kimberly basically turned to the technical team in 2023 and said, hey, let's start working on our plan of operations. Let's start doing those cultural studies. Let's start doing the bugs and bunny surveys. And, at the time was like, wow, really? But when you start thinking about the overall timeline that has to, go through to get these things done, having those studies completed in the hands of the BLM today in 2025.
Yeah.
We could be looking at a permit to build by the end of 2026, which would be phenomenal. And talk about being able to take advantage of gold prices. Yes, there's going to be ups and downs along the way, but I'm sure everyone who's watching this webinar has seen a gold chart for 15 years. And yep, it does have a zigzag, but the onward trend upward is always there. So
yeah, agreed.
Yeah, absolutely. So we have another question asking, really just kind of, how deep have you found gold so far?
Well, that's a really
Good
good question. In all of our conversation and all our presentations and the business plan, we have this tremendous focus on the oxide portion of our resource. But the reality is that oxide mineralization, those hydrothermal fluids that formed that, had to come from somewhere. And underneath the Santa Fe deposit specifically, we've been able to identify some of the key feeder structures. These are these fault zones which supplied a conduit for hydrothermal fluid to rise to shallow levels. And we've intercepted up to 4.5 meters of 110 grams.
With visible gold in it.
Yeah.
So it's a really deep system. I think we've drilled down like about 400 meters in the Santa Fe pit. And of course, we love to chase that high grade because it's so cool. But at the end of the day, it's in the sulfides, right? So you need to mine all the oxides first anyway. So it's like, okay, we need to stay focused on the oxides and build up that, because once you get done mining the oxide, it's a perfect storm to get to the sulfide. You're just drifting in rather than, going down a whole ramp system, which is high cost. So, the feeders are there. It's a really, really strong system. Again, when we're going back to permitting, we talk about this all the time. Of course, my geologists just want to drill. And when I gave them the bad news of, sorry guys, there's not enough money to drill and permit. So we kind of needed to, do a pause here and evaluate what we have and push forward the permitting, because at the end of the day, most juniors don't think about permitting 2 years ago. They just drill out the project and then sell off the company. And we really want to get this into production as fast as we can, whether we get to do that or if we get bought out at some point, then that's what it will be. But at the end of the day, it's just about making money for our shareholders, and how quickly can we do that through a solid business plan is the most important thing to Brian and I.
Okay. On that note, so we do have a question about kind of a potential takeover if that were to happen. So you do have quite a valuable project and a resulting low market cap. So how do you avoid kind of this
That's
type
a great
of takeover?
that's a great question. I mean, it's hard, I'll say that. A lot of juggling, but that being said, because Brian and I own a nice chunk of the company and our 3 largest shareholders, between all of us at the table, we could block any potential deal right now. Nobody's interested in selling the company at this price. We can't make up bad luck with having our largest shareholder have their mine collapse. Nobody could foresee that, so we're trying to recover along the way. Even though our assets are in Nevada, just having that 25% block in Victoria's hand last year really stopped our momentum, and now we're trying to recover from that. And so when we moved that block to our largest shareholders, it was a long discussion about, look, nobody here wants to sell this company right now. We need to bring the value back to where it should be. So if we're going to sell the company, it's got to be at a price that everybody sitting or listening to this cares about, not this. I mean, so that's why it's so important for Brian and I right now to get out and tell the story. There's nothing wrong with this project. In fact, it's fantastic. And we want to get the message out so we can move the share price in the right direction, because anybody buying in right now is going to make money, because I mean, it's so low right now. So it's a really good time to buy.
Well, I think also now that we've, with that quote Victoria overhang out of the question, it's gone.
Thank God.
And we had our major shareholders step up and put their hard-earned money into that block. They're definitely not looking to sell it tomorrow. They're not in it to make 3 or 4 cents a share. They're seeing the big picture. And then you go, okay, how does Santa Fe compare to our peers out there? Who else has a development project that's this advanced in the Great Basin with these types of grades? And all of a sudden, that list starts to get pretty darn short. And you start to go, okay, we do have something that is rather rare and unusual. And we do see, an NPV of 200 million US. I mean, that kind of implies a share price that's significantly higher than where we are today. So how do we achieve that? Things like this webinar.
Getting the news out,
and explaining the process, and how, as Kim likes to say, this is a preliminary economic assessment, meaning there's going to be further revisions on that economic assessment.
Yeah.
So we just build the story, and that's key.
Absolutely. All right, sounds great. So we have another question here regarding the expected CapEx. So could you give a little bit more information on the use of the proceeds?
You know the breakdown very well. Go ahead, Brian.
Yeah. So, I mean, when you look at the CapEx, it basically comes into 3 different areas. The biggest and most expensive part is the processing facility. So we're going to have to build a 12,500 ton per day crushing facility, and then materials handling. It's going to be a two-stage crush, and then you're going to have a carbon columns, the leach pads themselves, etc. You put all the process together, and that's about 2/3 of the total cost. Now, the balance, the other portion, is kind of equally divided between what is often called owner expenses and initial working capital. And so that's just, okay, now you've built the damn thing. Where's all the fuel? Where's all the explosives going to come from.
Yeah.
You got to pay for all that before you can even take your first round. So that's a big chunk of it. And then it's the actual mining startup, getting the mining equipment on site, beginning that first stripping. And so that's kind of the two different components, but without a doubt, it's the processing that is the lion's share of the capital costs for the project. As we pointed out in the Prezzo, our 130 million that we talk about does include a 20% contingency. And the reason why we use such a large number is because we still are at the PEA stage. If we advance to the PFS stage, that number would come down to like 15% and then eventually down to 10%. But our consultants and, we just think the greatest of Kappas, Cassidy, and Respect. They're two of the most renowned engineering firms in the mining space. If they say they want to use 20%, then we say yes.
We don't like it, but it is what it is. I mean, as long as people understand that we're putting in 20% to be very cautious because we don't want to be off, then people can do their own math. But I think it's a pretty low CapEx operation. I mean, most projects cost $500 million to build. So, when I look at raising $100 million for this, even our largest shareholders also do debt, and they're like, we're first in line. I mean, finding the money to build it is not going to be the hard thing. Putting the package together that's right for our company, the right blend is, what I'm in the back of my head always working on. But again, that will change. If we were trading at 50 cents right now, we would do a huge chunk of it in equity, because why not? It's not that dilutive, and it works. But then you flip the coin in debt with a short payback. It's non-dilutive at all to your shareholders. So there's lots of ways that we can play with that.
All right, sounds good. And so we have a few questions that are talking about financing, which I'll get into next. But first, can you talk about what are your column leaching recoveries?
Brian?
Yeah, that's a good question. So to date, there have been slightly over 40 different column leach tests done at the project. And as if you all recall, we are talking about essentially 5 separate deposits: Santa Fe, Slab, Calvada, Central, East, and then York. And so each area has its own unique metallurgical characteristics. Because the Santa Fe deposit, both historically and at present, is the largest of the resources there, it contains the most number of ounces. That's where most of the column leaching has been done. And there's been over 25 column leach tests done there. Obviously, we have all the detailed production records from when the mine was in operation, and they are, quite detailed. Corona did a very good job on a month-to-month basis documenting what was being mined, what was the ore type, was it run of mine, was it crushed, and what was the recovery. So to back up all that column leach work, we've got all that data as well. Now, the place that we believe, and this is brought up in the PEA, and Kappas Cassidy definitely believes that we could do some additional column leach testing, is over at the Slab and Calvada area. In the PEA, for the purposes of doing the cash flow model, we used a 50% recovery at Slab to produce the cash flow model. We use 60% to build the conceptual pit shell. They believe that with additional testing and further refinement of our ore type model, we'll do some more column leaches, and that would justify, with positive results, using much higher recoveries in plus 60% range for the cash flow model, and closer to 70% for building the conceptual pit shells that define the resource. Historically, we have seen, at Slab, it's been only limited column leach testing, and the recoveries vary from about 50% to 60%. So we know we're in that range. Over at Santa Fe, we see about that same range from 50%, but in places we see 75 to 80. And that's why we use a higher recovery in our models over at Santa Fe. So that is, again, a place that by doing the PEA, it kind of gives you a focus. This is where we need to go to improve our numbers. Yeah. And so that's a big benefit of going through the entire PEA process.
Yeah, absolutely. I mean, just raising it by 10% recoveries changes the entire model dramatically for the company.
Well, it changes the pit shell, it changes everything. The mine plan,
how much money we'll make,
and that then influences throughput. Well, maybe now you've identified additional ounces to be mined because the recoveries are greater. maybe we studied using 15,000 tons per day. And
It's
so,
just
just everything builds on itself.
refining.
All right. And so we have quite a few questions, as I mentioned, all looking at financing. So I'm just going to combine them all together. So how do you envision financing the project? So looking at percentages of debt, equity, streams and royalties. We had another one that came in asking if you're open to a royalty investment. So yeah, maybe you can kind of answer all of those in one
The
go.
answer is yes, yes, and yes. We're open to everything. You never close the door on anything, I don't believe. Like I was saying earlier, it's just about having a good balance. And when we are looking at putting that package together, what our share price is at the time, who are the top 3 debt facilities that we would possibly work with, looking at the terms, etc. I used to work for Waterton, a pretty aggressive debt fund, if anybody knows Waterton. So I'm pretty cautious when it comes to debt, but also it can be a really good thing if you know how to run a good business, and you know where to look for the pitfalls of a document. So like I said earlier, the royalty situation, we have a very small royalty on our patent claims that it doesn't even come into effect till we're producing over a couple 100,000 ounces, which will take a while to get through to that in that area. So basically our project is almost royalty free in my mind. So when I look at would we be willing to take a royalty? Absolutely. But again, it's all about balancing it. You don't want a 5% royalty on it. So it's just we'll look at all of it, and it'll be decided on the time, the gold price, everything else in between. So we know all the players. I mean, we've worked with them so many times. Brian and I have built 3 mines together, so it's not like we can't find the money. It's just finding the right money with the right groups, that if you miss a payment for some whatever on the ground, because it never goes as the spreadsheet shows, you need flexibility with a group that isn't gonna screw you over, frankly. So I think to me that part's going to be the fun part, because I love structuring deals. But again, that will probably be later this year we'll be having those conversations.
Well, the other thing too is as we further, refine the business model for the operation, I'm anticipating we're going to see that payback period continue
Shorter.
to shrink.
Yeah.
But let's even just say leave it at 2.5 years. You could structure a debt deal that captures that kind of a time frame, and so you're eventually paying off that very rapidly.
Yeah.
And as Kim likes to say,
Debt you can pay back, royalties are forever. So
yeah, royalties
that's what I'm saying. If you want to
royalties
do
are
a
forever.
royalty, don't give yourself a huge royalty just to find the money. I don't look at it like that. I always had this in my brain that if I inherited this from someone else and someone put a 5% royalty on this to find the money, I would look at it like, what were these people thinking? So that's not how we do business. We want to run a clean business and make good decisions that, 10 years from now, if it's in someone else's hands, that it's not one of those questions like, why would they have done this just to get the money? It has to be the right situation. So I think that's going to be the easiest part about this whole ordeal, is finding the money to build it. Just getting through the permits and still pushing the administration and the BLM offices and going in there and going, hey guys, give us our permit. Those type of things, you just got to stay on top of that. Those are the things that to me always concern me, because there's not things I can control. I can't really strong arm the Bureau of Land Management like I would love to.
Absolutely. And so I've got one more question that from the audience, unless anything else comes in while you're answering this one. But maybe, I think this is kind of a nice way to end. But what are some of the key reasons to be optimistic that the stock could perform better from this point?
Oh, well, that's a loaded question, but really the stock price is really low right now. I think it's a safe bet to put in money at this time, specifically as we're heading towards really being on the road and pitching this story to all the investors out there. We have a nice pipeline of good information coming down. We're in the best jurisdiction in the world. We're a past producing mine. You can take a lot of things and de-risk the project right off the bat. personally, when I'm investing specifically in junior mining, we all know junior mining is higher risk than a producer, obviously, because they've already gone through all this hard work. I look for certain things. Jurisdiction, has the management team done this before? Can they find the money to build it? It's my own personal risk when I look at different companies. Can they get it done? And I do believe that we can get it done. We have done it before. Brian and I took Prodigy Gold back in the day from a 20 million market cap and sold it to Argonaut Gold for $340 million. We did that in a 26-month timeline. And yes, the market was good. Gold was good. I do think gold right now is still disconnected from the junior space. I mean, sometimes I get emails from retail shareholders saying, why is your share price so low and gold so high? And then I look at my whole spreadsheet of companies I follow, and they're red, green too. It's a complete disconnect right now. But I do think when it hits, it's going to hit hard for the junior space. And if people really believe in junior mining companies and they have that, flavor for that style of risk, then they better be putting in money to companies now, because most stocks are not going to be getting any cheaper in the near future, because I really do think we're going to see a run. And this is the time to be picking up all the cheap stocks you want. But that's just my thought on
I think also, I mean, on a conventional basis, we will be putting out what you would say would be the normal news flow for a junior company. We'll have drill results. We'll be talking about further met testing, things we can document as incremental progress. Absolutely. We'll be heading toward that updated PEA and the permitting. But if you're a believer in gold and you think the gold is going to get through $3,000 and head upward, you look at the majors and most of the mid tiers right now, they are pretty much fully valued, and it reflects that marketplace. I mean, Agnico just got ahead of Newmont in terms of market capitalization.
Yeah. But they're printing money right now. That's why. But
if you're investing, though, do you see the opportunity for even a double on your money if you're going to invest in one of the majors? And that is a challenging no. Hard. Whereas as we continue to help people understand the very positive results of our PEA and how we're going to continue to build upon that, you start to ask, well, they're trading for 5 cents now. They could be trading for 25 cents once people start to understand exactly what the value proposition is. Yeah. And I think that's one of the biggest things that is going to make a big driver, because I think money is going to flow into the junior space, because people are just going to go, well, the heck with the majors. I'm going to pick the best of the juniors because that's where the biggest upside is.
Yep. That's where your 10 baggers are, of course.
Yeah, absolutely. So those are actually all of the questions that have come in today. Kimberly and Brian, if you want to say any closing notes or anything before we log off, but thank you for joining us today.
Thank you for having us. We really appreciate being here, and hopefully all the people listening are getting good information from us. Go to our website. We have awesome videos of our properties. You can really get to know them. Also, my personal email and phone number is always there, and I love talking to our shareholders. So, and if you're at MIF, the Metals Forum, or PDAC, stop by our booth and see us. I love meeting our shareholders, or future shareholders to be. So
yeah, I would love to see everybody in Toronto.
Yeah,
next week.
In the freezing cold.
Well, I look forward to seeing you both then as well.
Thanks everyone for joining.
Thank you.
Thank you very much.
Bye.